Welcome. You're listening to The Best of Investing. I'm your host, Edward Brown. My other co-hosts, Nam Phan and Mark Hunt, may or may not be able to join us today. We will see. Our phone number is 888-912-1190. Use that number to answer the trivia questions for a 5-pack tanning certificate given away during this show. That certificate's not sponsored by the radio station, but by Tan Bella Tanning Salon, with 2 locations in San Francisco and 1 in Marin. Certificates worth over $100. Today's trivia theme is general trivia. And today we have a special guest, super lawyer Jeff Lerman, who's been on our show a couple of times. Jeff, welcome to The Best of Investing.
Thank you. Always a pleasure to be here with you.
Thank you. Hey, let's get right into it. Let's hear your thoughts about investing during COVID in 2021.
Sure. And for those who may not know me, I am the real estate investor's lawyer, and I am also a real estate investor and also a principal in a family office. Hello, Mark.
Hey, Mark Hartman just joined us.
Yeah, great to see you, man. How are you?
Great to see you as always.
Yeah, thanks.
So yes, everybody, this is I have a deep interest in this particular topic, both because I am an investor and I am also dealing with investors. And so it's an interesting time. I have been doing this, and Mark, you're not as old as I am, but you've been doing it for a long time as well. This is an interesting time. And it's been said before, but this is probably the most unprecedented economy that we have ever dealt with, and it's certainly in my lifetime. Last year when we at the same time, we do every year, we do a symposium, a commercial real estate update trends and networking symposium. And last year, this year is going to be our 8th year. Last year was our 7th. And last year, the idea was, okay, this is the longest this is the longest up market in my lifetime. And the question is, how much longer can it last? And that was before COVID hit. And then COVID hit, and now what we're looking at is an interesting situation, because last year was a mixed bag for sure, but to everybody's surprise, not the least of who is me, the market is still on fire. And I got to tell you that last year at this time, I had my apartments. I have my apartments still. And I was really concerned about what impact COVID would have because of the eviction moratorium and the fact that so many of the tenants were going to be impacted, and I didn't know what to do. And so I had a hustle and huddle with my property management company. And we said, okay, let's see what we can do to cut back all expenses, because we just don't know. And here we are a year later, and I got to say that we did have some reduction in terms of collections, but not nearly. Sorry about that. Let me turn off my phone. Not nearly what I was afraid of at all.
Wow.
And as a matter of fact, we are now probably a day away from signing a contract to sell the apartments to somebody who's going to be paying a lot for the building. And
let me ask you, Jeff, are these apartments that you own, are they like all over the board? Some are high end, some are low end. But
right now, this is the only apartment complex that we still own. We have other rental properties, but they're not apartments.
Okay.
But I can tell you that the multifamily has actually done better than most people expected a year ago. And
right, exactly.
but so right now, here we are in COVID, still COVID, and we are where we are, and who knows how long it's going to be before we get back to whatever is going to be the new normal or back to the normal that used to be.
Yeah.
But for the year, we're assuming that it's going to be, this is going, even with the vaccines and everything else, there's still enough uncertainty in the situation where I think investors need to be careful what they do. And as a matter of fact, our theme for this year's symposium is COVID comeback, helping investors prepare, protect, and profit in 2021. Because I think that's I think that is what investors should be doing right now, is they should be preparing for the worst. We're still being very careful about making capital expenses. We're being very conservative, but you also need to protect yourself, because if it turns out that your particular investment is not doing well, what can you do to protect yourself and profit? Because there is a lot of opportunity in this market, because a lot of people are struggling, and this is what happens when the market starts to go sideways. And so in a nutshell, that is what I think where we are this year. I'm optimistic, and we're out there looking for our next deal. We're planning on doing a 1031 exchange, and there are opportunities. And I think that if you're an investor and listening to this right now, I think you should be really looking at what those potential opportunities could be. So that's my long-winded answer to your first question.
All right. I want to find out when we come back how a new administration, how you think that's going to affect the markets. Here's our first trivia question. Actually, our theme is songs in movies. What movie is associated with Katrina and the Waves' Walking on Sunshine? If you remember that song?
Of course.
A specific movie that was associated with that. All right.
Wow.
Call 888-912-1190. First caller with the correct answer is going to win that tanning certificate. Stay with us. You're listening to The Best of Investing. We're going to be right back. Welcome back to The Best of Investing. I'm Edward Brown, along with Mark Hunt. He's joined us today. And our special guest, Jeff Lerman, super lawyer. All right. First trivia question. What movie is associated with Katrina and the Waves' Walking on Sunshine? Which, by the way, is a very good song. This is a hard question.
It is a hard question.
The movie, it was called The Secret of My Success with Michael J. Fox. All right. So, Jeff.
Never would have gotten that.
No, that was.
I know. I'm pretty good at movies and music trivia. Never would have gotten.
Well, the next two are a little bit easier. All right. So, Jeff, you are the real estate attorney extraordinaire, I got to say. I do have to ask you a question. How do you think the new presidential administration, what laws are they thinking about, like, getting rid of 1031 exchange, et cetera? How do you think that's going to affect real estate?
Well, again, it's too soon to tell. We have a lot of speculation about what's going to happen. Obviously, we're expecting, and to refresh your memory, my wife, Michelle, is an estate planning attorney, and so she is dealing with a lot of that speculation and saying, these are the things that there are things that you should be doing now in contemplation of the kind of new rules, laws, whatever, that we expect this administration to be implementing. And so for your listeners, again, you should be talking to your estate planning attorney as well to have that conversation. And you may want to talk to your CPA, who I'm sure has nothing else going on right now, about what, if anything, you should do differently to prepare yourself for whatever the anticipated new laws might be. So, there's all that. I think, the other thing about this administration is that again, you got the fact that we are at a time when the economy has been hot for so long and is still hot, but it's not across the board, obviously. and it still could change. But at the same time, the Fed has basically uniquely, at least again in my lifetime, has usually they don't like to make forecasts in terms of when they're going to raise rates or how much they're going to raise it and all that. But from what we're hearing, the Feds are saying they're going to keep interest rates pretty close to where they are right now for the rest of the year.
Yeah.
Which, I mean, it is really unprecedented for them to do that. But I guess it's trying to settle everybody's nerves and concerns about what is going to happen. So, with all of that, it's really more important than ever that as investors, that you have a team that you are working with to advise you on what to do. So your team should be your CPA, your estate planning attorney, and if you're an investor, you should be talking to your real estate attorney, and so that you can make plans for how to again prepare, protect, and profit during this year. So,
Jeff, I got a question for you.
Yeah.
I want to pour salt on a wound that us Californians have been facing. State and local tax deduction, also known as SALT. I'm hearing whispers that maybe now that the Democrats are in control and California and New York are more or less run by Democrats, that they may bring that back. Because when they eliminated state and local tax deductions, they meaning the Trump administration's Tax Act starting in 2018, a lot of us who own a lot of real estate or have expensive homes, which is not unusual in California or the Bay Area, that was a big tax increase for those of us who were making, we're enjoying state and local tax deductions from our federal taxes. Is that something that you have any thoughts on or insight on?
Actually, I don't know any more than you do on this one. There's been all sorts of speculation about what's going to happen. It is really, I haven't heard anything definitive one way or the other. So yeah, it's a little bit too soon to tell.
Well, I know for Edward and I, we were making a lot of presentations as we were trying to raise capital some years back, going to Florida and speaking to family office groups to get them interested in some of our California syndications. And then once that state and local tax deduction was eliminated, that discouraged a lot of residents outside of California from investing in California syndications because they could no longer deduct those taxes from their federal bill. So we'll see. That'll be interesting because that is for those of us who raise money, that was a big deal, and for those of us who live in California and pay lots of real estate taxes and lots of interest on our mortgages. That was an unexpected tax increase for us.
Well, California is not high on a lot of investor lists these days. It actually hasn't been for a long time, just because, depending on the asset class, it's just not a. It's just not. It's difficult to get the kind of return you get on real estate here that you can get elsewhere, which is why I started investing outside California years ago. So.
Yeah, I'm just looking online here, and it says that there's a new bill that they're trying to impose an excise tax on California property owners California property owners for renting or leasing property. Nice. Says we don't pay enough.
Yeah.
Crazy.
Yeah.
I mean, Jeff, on the commercial side, and I know you're going to be talking about this in your symposium. Edward and I on this show talk a lot about the resilience of the residential real estate market. And for those tangentially involved, like mortgage companies or the private money mortgage companies like our company, Pacific Private Money, we had a banner year in 2020, and we were extremely fortunate to be in an industry that really did not suffer and was extremely resilient. But you are very involved in many commercial investments. What are some of the hardest hit that are still kind of in flux versus where are you seeing some recovery in commercial?
Well, for sure, office and retail and hospitality are taking, they're taking the biggest hit.
Mm-hmm.
And there's a lot of speculation about where ultimately all that's going to land. We're seeing a lot of malls which are repurposing, going more towards housing.
Yeah.
There's a lot of speculation about all the office space, and probably San Francisco is certainly one of the most exposed and risky right now in the country. I mean, just, it's so, again, talking about what a crazy 8 years or so it's been. The housing, the office market in the city just exploded. I mean, when
Salesforce Tower.
Salesforce opened, I mean, they opened fully leased, right? I mean, it was crazy, and now who knows? So it's
hold that thought. We have to do these hard breaks. The station.
Yeah, of course.
All right. Second trivia question on songs in the movies. What movie is associated with the song "Take My Breath Away" by the group Berlin? All right. 888-912-1190. First caller with the correct answer wins that Danning certificate. Stay with us. The Best of Investing. We'll be right back. Welcome back to the Best of Investing. I'm Edward Brown, along with Jeff Lerman and Mark Humph. Second trivia question. What movie is associated with the song "Take My Breath Away" by the group Berlin? Jeff.
The one where he does his first movie where he was doing the dance?
No. That's you're thinking Risky Business.
Risky Business.
No. Mark, you know the answer to this, don't you?
I don't know. I'm sorry.
Top Gun.
Top Gun.
That was in Top Gun?
No,
I don't remember the scene in Top Gun where that happened. I saw that movie.
It's when he's fallen in love with the lieutenant or whatever her name is.
Okay.
All right.
Hey, continuing with the commercial real estate, do you see opportunities still in the industrial and maybe related to that cannabis? Is that something that you think is held up fairly well in 2020 during COVID?
Industrial does seem to be one of the asset classes that is doing pretty well. And for cannabis has been having its own challenges that are not necessarily COVID related. It is the NIMBY, not in my backyard. Every time, right here in Marin, Marin. Talk about defying the odds. You would think if there's one county in the country where cannabis would be flourishing, you would think it would be where the Grateful Dead used to have their
hang out.
Well, we're all of an age where we remember how much we enjoyed that particular product in the 70s around here. You would think that we'd be the first ones, but those of us now, we all have kids and they're all driving and.
It seems like, as a matter of fact, at our symposium, we're going to be having an attorney who she focuses primarily on cannabis, and she's going to be talking about it. But cannabis has had its own challenges in generating the kind of tax revenue that everybody was hoping it would. One of the biggest challenges is that you still have the illegal, the growers who are not legal, and they are still they're not hampered by all the regulations that the legal cannabis are, and so it's been.
Well, that's the thing is, of course they're going to go underground. They don't want to be taxed, and I mean, it's just bottom line profits, and the old "do as I say, not as I do" type of attitude with the NIMBYism. Tell us a little bit more about the symposium, because that's open to a lot of people, isn't it?
So it's going to be on March 25 and actually the morning of March 26 for people who are buying the VIP tickets. And what we're doing is it's a full day event. We're going to be going from 9 in the morning to 8 o'clock at night. And this year we're doing several things that we haven't done before. One is called we're going to do a fund your deal session, and that's going to be in the evening. And we're getting a panel of 4 or 5 major investors, syndicators, whatnot, and we're going to have any of the attendees who have a deal that they're trying to raise money for, you can pitch it and hopefully get one or more of the people on the panel expressing an interest and hopefully helping you fund your deal just from that event.
And are you recording it? Because by the time this show airs, it'll be Saturday night. So will people be able to, because people who are listening to the show right now are saying, well, wait a minute, the 25th, I just missed it.
March 25th, right?
It's March 25th.
Oh, March 25th. For some reason I was thinking it was
it's February, Edward.
26th. My bad. Forget what I just said. Okay, well, good. How did they?
What were you saying about cannabis a minute ago?
Yeah. Oopers. Oh, you know what it was? I'm looking at the email that says February 26th. Not my bad.
Okay.
But it's really March 26th.
This is going to be we've also got great speakers. We've got about 18 speakers, and a couple of those speakers are they're well known around the country. One of them is Dave Lindahl from Boston, and he's got a company called RE Mentor. Mark, have you ever heard of Dave Lindahl?
Absolutely have. Yeah, he's very well known in the real estate industry, and I know that he's done a number of boot camps for investors. He's been
right. I taught his private money boot camp for several years, and he's a friend, and so he's going to be there. And we got Neil Bawa, who's going to be there. He's a syndicator who's got about $450 million worth of deals going on right now, and so you're going to have great networking. Last year we had 240, and this year we're looking to double that, and we're doing it by bringing in strategic partners like Neil and Dave. Dave has a database of over 300,000 investors, and he's going to be promoting it to his database. And so we're looking to have a lot of people. And a lot of it's going to be just networking with other investors, because investing can be a very isolating business. And the more people you know, the better you can get people to help you get what you're looking for. But we got all sorts of different topics that are going to help you in figuring out how to make this the best year ever for you in your investing.
Yeah.
Very cool.
Well, so if you're interested, what you should do is go to the website, which is CRE Symposium, as in Commercial Real Estate Symposium. And you said that this is going to be aired Saturday. So we have our super early bird pricing, which is going to be ending on Monday at 11:59 p.m. So right when you're listening to this, you should go to your computer and pull it up and check it out and take advantage of it. You can save about 60% on tickets if you buy it before Monday evening.
If they is it on your website as well, lermanlaw.com?
Yeah, it's a pop-up when you get to our website. It's Lerman Law, or if you want it, if for your investors, you can go to realestateinvestorlaw.com, realestateinvestorlaw.com. And if they miss both of those, they can just call you guys.
All right, Jeff Lerman. Jeff Lerman, thank you so much for joining us. I know you have to go to another appointment, but I want you to hear the third trivia question. What movie is associated with the song "Let's Hear It for the Boy" by Denise Williams? I didn't know she sang that. All right. Call 888-912-1190. First call.
Damn, you're good.
Really?
You're good.
when I mentioned the movie, you'll go, "Oh yeah, I remember that." Okay, what movie is associated with the song?
Oh, I know what it is.
Okay, there you go. All right, 888-912-1190. First caller with the correct answer is going to win the tanning certificate. Stay with us. Don't touch that dial. The Best of Investing. We'll be right back. Welcome back to the Best of Investing. I'm Edward Brown, along with Mark Hanf of Pacific Private Money. Third trivia question. What movie is associated with the song "Let's Hear It for the Boy"?
Well, Jeff knew it. I didn't. Footloose.
Footloose. That is correct. All right.
I don't remember where that was in the movie either.
Yeah.
These were hard trivia questions.
Hard ones this time. Okay.
Yeah.
So, Mark, an email comes in. Does your firm make construction loans? We hardly ever talk about construction loans on the Best of Investing, but does your firm make them?
So my firm is Pacific Private Money. We're based right here in the San Francisco Bay Area. We're an alternative real estate finance provider, which is a very fancy term for what used to be widely called hard money lender, and then more recently, private money lender. It's still called private money and hard money in some circles, but we've broadened our menu of loans over the years, and we prefer the alternative finance provider moniker. But whatever you call us, and please call us and visit our website at pacificprivatemoney.com, because we do offer a slate of bridge loans for both consumers as well as real estate investors and developers. And you asked if we do construction loans. And let me just say that in the hard money, private money realm, fix and flip loans are probably the most common loan out there. And there's a lot of companies that if you're a real estate investor or flipper and you like buying homes and fixing them up and flipping, there are companies out there that are just falling all over themselves for your business. That's the most popular loan product out there in the private money realm. Construction, which would include major remodel and ground up construction, that loan product is less common. In fact, if you call up the top 5 California hard money lenders, and I'm not going to name them because we're not quite in that top 5 yet, but we hope to be in the coming years, they will all but likely say no if you bring them a ground up construction loan. And there's a lot of ground up construction opportunities in California, particularly the fire damaged homes. You basically tear down the rest of the building and tear down whatever's left, or pull out the old foundation and put up a new home. Most of the fix and flip lenders are not doing ground up or major remodel. Now, at Pacific Private Money, we have been doing those loans for many years. And in the last year, we formed a special fund called the Northstar Fund that is specifically for funding and originating ground up construction loans. So we prefer, single family residential. That's our favorite, but we will do small multifamily projects. Our loan sizes are, somewhat limited. We're not doing the, $25 million loans and up, but we are doing, between, anywhere from 1 million to 5 million is in our preferred breadbasket. We can go up maybe between 5 and 10 on certain projects. But the bottom line is that, if you're a real estate investor or a contractor, or a contractor who's been challenged with getting construction financing from the local banks, and of course that's the best place to get financing if you can, because that's the most the lowest effective money is bank money. So if you can get 5% construction loan or 6% construction loan from your bank, you should. But I will tell you that that's very, very difficult for many contractors. It's just one of the toughest loans to get from a bank is a construction loan today. And that has been true, especially since COVID hit in March of 2020. Many of the banks that were making construction loans stopped. And I know this for a fact because I've been trying to help some of my better clients get bank financing, and we've been running into snags with that. So, but for the private side, we will consider ground up construction financing, and that is one of our kind of a specialty niche, if you might, products. The other niche lending product that we have at Pacific Private Money that, again, most private lenders won't do is we will actually make loans to consumers buying a property they intend to make as their primary residence. So consumer purpose purchase money bridge loans is one of our, the other of the 2 loans that we make that are kind of unique. And anyway, for more information about that, please go to our website. We do have information about our menu of products there. That's pacificprivatemoney.com. Or if you're driving around, you want to pick up the phone and call our office and leave a message for one of our loan agents to call you on Monday. Our phone number is 415-883-2150, 415-883-2150. We're right here in the Bay Area.
Very good. And a couple more minutes.
Yes. So on the flip side of that, the capital that we use for making these loans comes from private individual investors, many whom also live right here in the Bay Area. So we're a California lender. We can lend anywhere in California. And most of the investors that invest in one or more of our investment vehicles also happen to live here in California. So we're a very regionally state-focused operation. We know California very well. We're very comfortable with lending in California. And so we have over 300 clients who are active investors with our company today, some of them to the tune of several $1,000,000. And we utilize that capital to originate loans to our borrowers. Some of those loans will sell after we close to third parties, but many of those we portfolio and manage all the way through to the end. And so if you're looking for an alternative investment strategy, or maybe you want to diversify your holdings, you've done really well in the stock market maybe this past year, and you want to take some of those profits and maybe put them into something that's closer to a fixed income. Our investments aren't considered fixed income investments, but they are highly reliable in the amounts that the yields that we're returning. And so as low as 7% and as high as 10%, depending on which of the three funds that you might have an interest in. Our Freedom Fund pays a flat 7% for the use of your money with no enforced lockup. We also have the Pacific Private Money Fund, our legacy fund, that has been paying about 7.5 to 7.75 consistently for several years now. And then we have our new Northstar Capital Fund, which is our construction lending fund for California contractors. That's paying 10% right now. So again, for more information on how you can earn up as much as 10% on your money, distributed monthly and quarterly, depending on which fund you are interested in. Again, give us a shout. Go to our website at pacificprivatemoney.com and you can click for more information or give us a call, and one of our team would be happy to talk to you and share more information about how you can make high returns secured by real estate loans right here in California. 415-883-2150.
The best part I like is that there's no fee to get in, there's no fee to get out, and there's a very short hold period. And even on the Freedom Fund, there's no hold period. Can't get shorter than that, can you?
Yeah, these are traditional mortgage pool funds, and most mortgage pool funds have no load going in, no load going out, low fees, and highly efficient, and secured by California real estate at fairly conservative loan to values, so that your risk of loss is strategically low and intended and designed to be that way. So again, we've been doing this for many years. I've been in the real estate business for 40 years. And so again, for more information, pacificprivatemoney.com.
All right, stay with us. Best of Investing will be right back with some closing comments. Welcome back to the Best of Investing. Last time for today, I'm Edward Brown, your host, along with Mark Hunt of Pacific Private Money. No trivia question, but Mark, give us a kind of an overview of what's going on in California, residential real estate wise.
Well, it's interestingly enough, the news is that the news has been fairly consistent for the last 6 months. I would say, we had that shell shock when COVID. We first went into shelter in place mid-March a year ago, 11 months ago. And there was speculation that this was it. Real estate was going to drop in value 30%, among other shocks to the economy. And it wasn't really until July, right around July, that the writing on the wall became very clear, and that was residential real estate was not going down in value. There was not going to be any fire sale. There was not going to be tremendous opportunities for investors to take advantage of buying opportunities. Now, that being said, there was still, if you look back 6 months even, real estate prices are up across the board, across the country, in almost all markets from last summer. So even if you sat on the sidelines and did nothing, and you had the capability of buying real estate and didn't, well, it's more expensive today than it was last year. But if you did buy real estate, you've done pretty well. And If you've refinanced your mortgage, maybe you refinanced it more than a couple of times. I know I did. I've got a beautiful 3% interest rate. I probably could have gotten it a little bit lower if I tried again, earlier this year. But I said, you know what, that's enough.
Yeah, I just
it takes a while to do that.
I know. I'm in the process of refinancing 1.99%.
Wow.
Yeah, and it's
I'm gonna be jealous if you get that one.
Well, yeah, it's just under the jumbo limit or something like that.
Yeah. Oh, there you go. Well, that's good. Yeah. It's just so we had Jeff on earlier, and he was talking about how amazing it was that a year ago we were saying that we just set a record for the longest peacetime expansion in the economy and in the real estate market cycle, wondering when the cycle was going to hit next. And now we're looking, most experts predict that 2021 will be yet another up year for real estate values. California can expect right around a 5% increase in valuations overall on average. But it is tough. You never want to say, because we've learned the hard way that, well, we've finally broken the real estate cycle or the economic cycle, because, we pretty much know that something's going to happen and we're going to have another recession, both a general recession and very likely a real estate recession where prices will dip down some amount, whether it's 5, 10, 15%, it's hard to know. Or we can have some unexpected black swan event, similar to what happened with COVID. And that
everybody needs a place to live.
Yeah, but again, what really supports, and again, I keep hammering this point home, what supports California real estate values is that we're just not building anywhere near the new homes we need to keep pace with demand.
Yeah.
Heck, we're not even replacing the homes we lost in fires yet. We've replaced less than half of the homes that have burned in the last 3 years with the fires. That's close to 20,000 homes that were lost since 2017, and only about half of those have been rebuilt.
I mean, everything is so expensive. Materials, labor. I mean, everything is just so darn expensive.
That's all part of it. Yeah, that's all part of it. And in fact, it makes it even hard. Why are we not building homes fast enough? Well, the other side of it is it's hard for a developer to make a profit if the cost of building is so high that you're not even sure, even with high home prices, can you make a profit?
Fees. That's where it really comes down to. All right. You ready for our, today we have puns for the day.
All right.
All right. Will glass coffins be a success? Remains to be seen.
God, that's horrible.
That's bad, right? And I lost my job at the bank on my very first day. A woman asked me to check her balance, so I pushed her over. And I got over my addiction to chocolate, marshmallows, and nuts. I won't lie. It was a rocky road. All right. Tune in next week to The Best of Investing. We're going to be giving away more prizes for answering trivia questions. Thanks for listening. On behalf of our team, I'm Edward Brown. We're wishing you the best of investing. So long.
So long.